thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacted mortgage rates on a daily basis, whether it might come from the economic calendar or it could come from the geopolitical or headline news. Heck, sometimes even the market sentiment even changes where now good news is bad news, and that can create a lot of confusion for a lot of people who are watching and not knowing what's understand. So we try to give those explanations to you, and hopefully if you're looking to refinance or buy, this will give you the information you need to make an informed decision for your transactions. Or if you're if you're in the industry, hopefully this will give you some background information what's going on inside the markets here. A little bit about myself is I'm a loan officer. I do work with the national lender, so we do loans in all 50 states. Uh, so we'd love to earn the opportunity to earn your business, whether if you're looking to refinance or buy, please reach out. We'd love to talk to you. But more than that, we'd like to be able to go ahead and be a resource for you. So you guys, if you have any questions, please reach out. We're here to try and answer whatever questions you may have. So without further ado, we'll jump right into it. We'll start off with the economic calendar. We'll start with the minor report that comes out every week, and that's brought to you by the MBA. They're called their Mortgage Loan Activity Report. So the purchase side of things, what we can see from week to week, it did increase a little bit by about 3,000. However, the refinance, as well, to be expected, did dip a little bit here. So what's keeping refinance, of course, are those who are looking to cash out refinance. Rates were good for so long that a lot of people have lower rates. However, now they may need to take money out of that property and they're refinancing at a little bit higher rate for many different reasons. Could be add on, maybe some stuff they want to do to the house. Maybe they want to consolidate some credit card bills that they had or other bills coming in, or perhaps college education. Many different reasons, and everybody has their own personal choice as to what they want to do with that. But with that being said, we did see a decline with the higher rates coming up. Uh, then also we got, last but not least, we got the producer price index. This is the PPI, or also inflation on the wholesale side of things. It's kind of like the Rodney Dangerfield, we like to term it, for inflation data, because it doesn't always get the respect it deserves. Primarily because wholesalers don't always pass on the expenses to the consumers. Yesterday we got the CPI report. The core came in a little bit tamer than we expected, so investors are in hope that we may be seeing it top out and hopefully start seeing reside a little bit. So they're kind of today they're going to be shrugging this off, even though it did come in a little bit hotter. So if you look at the month over month for the headline number, the February's was revised higher from 0.8% to 0.9%. Forecast was calling for 1.1% for March, and it came a little hotter at 1.4%. Now it went from like 10%, I believe, to just over 11% to like 10% to like 11.2%. So it went up basically at just over 1% in year over year, and obviously that's a lot in there. And again, these are highest we've seen since early 80s. And then now once you strip out the food and energy, we get the core PPI. So it's month over month also got revised higher from 0.2% to 0.4%. So that's even higher of a spread in the month of February. Forecast gone for 0.5%, and it came in at 1%. So still pretty hot right there. It's year over year jumped from 8.7 because it was revised slightly higher from the month of February to 9.2%. So again, we do have to keep an eye on these, but right now investors are kind of shrugging it. They did like the core inventory coming in a little bit less, so they're kind of under the impression that maybe we might see some that could be subsiding a little bit. Headline news, we do got a few central banks around the world that have been meeting and did some rate hikes. I believe the New Zealand Bank of High and Canada, I believe it was, raised theirs by 0.5 point. And then we have a few other ones. Tomorrow will be a kind of a big one because we'll see what the ECB is going to do tomorrow. If they're going to raise it like a 0.5 point, they'll be meeting for theirs. So let's take a look here at the mortgage-backed securities. Right now we're up 34 basis points from when we left off. So that means we're getting a bit of an improvement in our pricing today. Yesterday, after the 10-year Treasury, it came in, it disappointed the auction. So we did subside a bit yesterday. So there was some pullback in pricing on yesterday as a result of that. So we're getting closer to our better pricing yesterday, or maybe even slightly better than yesterday. So just be prepared in case there's any more pullback. As you can see here, there's a wick here formed, which means that we're off our earlier highs. So we have subsided a little bit. So we'll just keep our eyes on it. But as of right now, pricing is a little bit better than what we saw. And then, of course, you'll see the after the PPI report came in, and we kind of spiked upwards a bit. Treasuries, we'll take a look here, and treasuries again are kind of dropping a little bit as well, which is good news for us. It's down to about 2.69 now. I'm sorry, 2.68, excuse me, pardon me, 2.68 range right now on the range. So yesterday, if I remember, we were down to about 2.7. I think it did settle a little higher, but it was around 2.7 when we did this report yesterday. All right, now lastly, our last report is the average rate for conforming loan limit. These do have points into it. We'll start off with the 30-year fix, which is now at 5.12. Yesterday, I believe we were at like 5.25, and then 15-year is at 4.37. So, if you guys would like a rate quote, please reach out. We are here to help you guys out. In the meanwhile, if you can do us a favor and help us out, greatly smash that like button and share us. We greatly appreciate it. It helps our channel out. We greatly appreciate you folks watching. And again, we're here. If you guys got questions we can help you guys out with, answering questions for you, please reach out too. We're here. Thanks so much for watching. Look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.